taking a look at the @cl.c contract in TradeStation. It's a continuous contract, non-back adjusted, and it includes pit and electronic data before 2006. 2006, Cobra Crude Oil only traded in the pit during the day and electronic at night. And since 2006, we have a electronic market during the day as well. And so this is a combination of what the price is 24 hours a day going back to 1987. Essentially, this allows us to test strategies further back than 2006, which we originally test. And when markets become electronic, sometimes they take on a new personality. If a market was pit traded, then all of a sudden it's electronically traded. It trades a little bit different, but it's always promising to test it on both sets of data and go back further and to further validate. And that's what I like to do sometimes, is to further validate strategies and see how they work. And so testing Cobra Crude back to 1987, and you see recent trades here. Yesterday was a losing trade, and today we're in the middle of a trade. And this data is delayed because it requires pit data, and I only have electronic data on this platform. And take a look at the equity curve. 2006 starts right in here, so there hasn't been as many trades prior to 2006. Like I said, a market can take on a new personality when it becomes electronically traded. So if you look at the annual returns, here they are. And if you go back to 1987, there's not as many trades back then in that time frame. There's not much going on for this strategy, and then the volatility picks up a little bit, and then you see at the end of 2006, beginning of 2007, this takes on a more active personality when it becomes electronically traded. And so you see the results here on this strategy, and that's the @cl.c contract. 75.10 drawdown. Average trade profit 112. We don't include slippage and commission, but 112 is a nice number and gives us lots of room for slippage and commission. And we can also want to test this recently on Brent Crude and WTI, and without changing the strategy at all. I want to show you the results for that. Here it is on WTI. This is a thinly traded market. You see there's more gaps in this data. There's not as much volume. Today there's 20,260 contracts, and TradeStation does not have an @WBS, and so we had to create a customized back adjusted contract. @WBS equals 107XN, and it's also delayed because I don't have ICE Europe. I don't trade ICE Europe yet, but I'm doing some research on it. To get this contract, you do have to have the European region set up, and just to get delayed data. And so I have that, and you can see what WTI does on this. Here are the results. Same exact parameters as Cobra Crude that we trade on the NYMEX. 103.48 average trade profit. Almost a $10,000 drawdown. Here's the equity curve. Nice equity curve. This goes back to August of 2008. And so WTI works well with this strategy, which further validates Cobra Crude. And then we take a look at Brent Crude, and then we place the exact same strategy on Brent Crude, and you see the results. Really nice year. You can see there's 2008, 2009, 2010, 2011, and then 2012 and 2013 are a little bit less profitable than 2008 to 2011. But almost at that 5-figure mark of 10,000, really close to that. And you see the last 12 months, it's 94.10. So even though we're only up 5,500 in 2014, the last 12 months is 94.10. So it's kind of below its average. And the question is, will it then have a surge and return to its average in the short term? And so that's one thing I like to look at, is how it's done in the past, where it's at this year, and where it's at the last 12 months. And if the strategy is kind of in a dip, in a place to buy in a dip because it's underperformed. And so you can see here the results: 111 average trade profit, 72.30 drawdown, almost the same thing as NYMEX Cobra Crude. And this goes back to August of 2008 as well. And these are traded on the ICE. You'd have to get live ICE Europe data to trade these. And But one of the main reasons I want to show you this is these markets have very similar prices to crude oil on the NYMEX, and the same exact strategy tests well. And we further validate the NYMEX Cobra Crude when we do these sort of tests, and as we're taking a look at this.